Hello?
Joseph?
Yes?
Hi, Joseph. This is Leslie. I own LPC Family Insurance Services, and your information was forwarded to my office. Looks like you guys wanted some information on mortgage protection. Let me verify the stuff that I received just because sometimes there's errors and I want to make sure it's accurate. So I have your last name is Martin.
That's correct.
You live at 315 Walnut, and that's in Panhandle, Texas, and that's 79068.
Yeah, that's where we live.
Okay.
I didn't get clear who gave you the information?
Well, typically what happens is if you have a really great credit rating, the bank will forward this information to some insurance carriers, and it was forwarded then to my office. And so I just want to kind of educate you on what mortgage protection is, what it covers, and see if it's a fit for your family. So let me go ahead and verify the mortgage amount. It's listed at $153,900. Is that accurate?
Yeah.
Prosperity Bank is the lender?
Yes, that's correct.
Okay, very good. And then I have some health, you guys actually filled in a couple of other things. And so I have your wife's name listed as Chloe. Is that accurate?
Yeah.
Okay.
You did.
Okay, perfect. You also listed your birthday as March 2nd of 94.
Mm-hmm.
Height 6'2", weight 265, and that you are a non-smoker.
Right.
Perfect. Let me go ahead and verify Chloe's as well. Hers is February 26th of 94.
Yes, that's right.
5'7" and 190, and also a non-smoker.
That's correct. Yeah.
Okay, very good. So Joseph, in order to do this, I would like to kind of explain mortgage protection and what it is. And so did you guys just buy your home or refinance?
Yeah, a couple of months ago.
Which
we
one?
Bought it.
You bought it? Perfect. Okay.
Yeah.
So as we go through this process, my role is just to help you determine if you're overinsured or underinsured, and then just see if there's something that fits your needs. So mortgage protection, whenever you guys bought your home, I know there was a lot of paperwork involved, and a couple of those things, you might have come across something called PMI, which is private mortgage insurance. I really like to educate people on that because what that is you're obligated to pay for it, but the bank is the only one that benefits from that. And so essentially what happens if you default on your loan, then that is protecting the bank. And the other thing that you have to carry is homeowners insurance. And there again, you're obligated to do that, but that protects your structure from damage, Mother Nature storms, things like that. So mortgage protection is the only thing out there that's going to protect you. And what it's designed to do is give you that protection of, God forbid, Joseph, you were to pass away, Chloe would have the ability to stay in the home, pay the mortgage off, that sort of thing.
Yeah, I understand.
Okay, very good. Have a couple of more questions that we didn't cover initially. Joseph, do you have any health problems? I'd like to go over your health history.
Okay.
Any prior heart attack, stroke, cancer, anything like that? Diabetes?
I have type 2 diabetes.
Okay. All right, very good. And with the type 2 diabetes, you're awfully young. Are you on metformin, some kind of oral medication? Okay.
I take metformin.
Okay, so no insulin?
No.
Very good. Did the doctor prescribe anything else to help, like with the diabetes, like blood pressure medicine, cholesterol medication? Or are you literally just on the metformin?
I'm just on the metformin. It was kind of a borderline situation, and he just wanted me to cut back on the groceries a little bit and wanted to keep this under control. So it's fairly mild relative to that, to the overall issue.
I can tell you with my husband, when he was diagnosed with type 2 diabetes, he literally, instead of heard moderation, he heard I can't eat anything. And so he ate everything under the sun. So watch your diet. That's really important. Stay healthy. Joseph, where do you work at?
I work at the drugstore. I'm a pharmacist.
Oh, very good. What kind of benefits are provided through your employer? Do you have life insurance?
I'm not sure. I'm not aware that I have any there. We primarily focused on being sure we had health insurance coverage. There may be some in there, but if there is, I'm not real sure about it.
Okay. I don't know if Chloe's available or not, but I do want to visit briefly about her health history. Do you know if Chloe's on any medication?
No, she doesn't take any regular medication.
Oh, perfect. Good for her. Is Chloe employed?
Yes, she is.
Okay.
She works as a dental assistant.
Gotcha. Is it kind of the same situation where you're not sure about her life insurance?
Yeah, it's a small office. I don't think they have a whole lot.
Okay, very good. Well, what I would like to do is look at the mortgage amount and build something around that mortgage, the amount that you have financed and for the term that you have it financed. Joseph, how much is your monthly payment?
$1,500 thereabouts.
Okay. Do you know if we're going to look at covering just you or Chloe as well?
I think we should look at both of us.
Okay. Let's start with you. What I'd like to do is just look at some numbers. Does that sound good?
That sounds fine.
All right.
Curious to see what this will cost.
Very good. So what I want to do is start with full coverage at the $155,000, and then Joseph, if this is out of the price range, we're just going to work backwards. So I want to be very aware of your budget. So my concern would be when we're talking about money, ensure that it's something that if there was something occurred at home, you had to buy a set of tires or your refrigerator went out or something like that. I want to make sure, even in the event of something like that happening, that this is still affordable. So we're just going to start. So like I said, you're really young and pretty healthy other than the diabetes, but not being on insulin. That's a good thing for you.
Okay.
So $155,000 for 30 years is $40.92 a month.
Oh, really? That seems pretty affordable. I think that would work in our budget. Does that include Chloe?
It does not. So the same for her. It's a little bit cheaper. 30 years, $155,000 is $31.97. So when we put that together, we're still under $75 a month. Does that fit your budget?
Well, I think we could probably do that. I sort of thought we already had this coverage, but what you explained helped me. But yeah, that sounds kind of doable.
Okay. Well, there's actually some perks to this coverage. What I'm looking at is Foresters. They've been around for a long time, real reputable company, but they do have some perks in their policy. Joseph, do you guys have children by any chance?
Not yet, but we're planning.
Very good. Well, there's a couple of things that are written into these policies. One is living benefits. Living benefits are different from old life insurance. So I like to use my mother as an example. So my mom had 3 term policies, and she actually 2 of them she didn't renew due to the price. But my mom had heart problems for about 16 years. And so there were situations and times in her life that those living benefits would have been just remarkable. It would have helped her a lot. So what that means is they're chronic, terminal, and critical. So say, for instance, Joseph, we write this policy and God forbid you end up having a heart attack. You can access part of that death benefit pre-death to help with whatever you need, medical bills, living expenses, that kind of thing. So that's amazing that insurance companies put the living benefits in these policies so that the insured is actually able to use these as well. The other thing is there's an orphan benefit. What that means to you is God forbid, if something happened to you and Chloe, once you have children, if you were to pass away prior to age 18, this orphan benefit is not costing you anything extra. It's just built into the policy, and foresters would pay a guardian $900 a month per child until they turn 18.
Wow.
So it's just, gives you a little bit of peace of mind, if something, terrible was to happen. So what I would like to do is, I think it's a cool experiment. Joseph, can you grab a piece of paper?
Yeah, I have one.
Perfect. So we're just going to draw a little circle in the middle of the paper. And what I want to do is list your mortgage. Do you guys have vehicles financed or anything?
Yeah, we have 2 cars. One's paid for and one was still making payments on.
Okay, so what I want you to do is draw a circle. In the middle of that circle, we're just going to round your mortgage up to $155,000. And how much is the car that's financed?
We owe about $12,000 on it.
Okay, so let's just make that $167,000. On the right-hand side of the circle, draw an arrow, and above the arrow, write Chloe. And Joseph, how much do you think Chloe makes annually? And it doesn't have to be accurate, just a guess.
Probably $35,000.
Perfect. Just write that under the arrow. And we're going to do the same thing on the left side, and we're going to write your name.
Yeah.
And then how much do you think you make annually?
I make about 70. It's
Perfect.
a small town. I can't make what they make in a big town.
Well, you wouldn't want to live in a big town anyhow. Small towns are.
No, we like Panhandle.
Okay, so what I'd like for you to do, Joseph, is simply take your left hand and cover your name and your income up. And then and then let's look at where that leaves Chloe. So at $35,000 a year, having to manage $167,000 in debt alone, we definitely want to make sure we get her protected. Right. So it's a little different perspective just when you look at it like this. And we can do the same for Chloe and cover her up. And then that leaves you owing that debt by yourself. So, when we're talking in terms of life insurance, it's not always about, I think a lump sum is real important to be able to pay that mortgage off. But Joseph, if something were to happen to you, what's going to happen is Chloe's going to get a cashier's check for the amount of the face amount for whatever we write this for. And then Chloe's going to be able to apply that money wherever she needs to. And if that's the mortgage, that's fine. If there's medical bills, whatever she needs.
Well, we're planning a family, and it's going to be even more difficult than that if we have kids.
Well,
which we were planning on doing.
Very good. Children just make life that much better, and grandbabies make them even better. So the other thing I was going to touch on is just the fact that we do, let's just say the $155,000 face amount. When we were covering you up, she's not only having that debt, she's losing your income as well. So I think it's just a good way to illustrate, how we need to protect her and you as well. So, all right. You said you were good with the amounts. What I'd like to do now is go ahead and start the application and do the qualification process. And in order to do that, Joseph, it's going to take me a couple of minutes to pull the application up. The first page is about me, my producer number, that sort of thing. So in the meantime, there's a couple of things I'm going to need from you to complete the application. One, I want to make sure you have access to email.
I do.
Very good. So we're going to need your bank account, your routing number, and then a couple of the other questions will ask things about medication. So make sure you have that handy. And it's also going to ask who your doctor is. And if you want to get the phone number and address together for me, that's fine. If not, when we get to that part of the application, then I can Google it for you.
Okay.
Sound good? Want to go ahead and start the application?
Yes, ma'am. That sounds great.
All right, let's get it started on you first.
All right.